Welcome to today's episode of adfartech Venture podcast, and I'm the host of the show, Shonal Shah, where we deep dive into the world of startup innovation and impact-driven ventures. And I'm thrilled to introduce our today's guest, Mr. Chris Wilson. So, since July 2009, Chris has been the managing director and founder of Synectics, based in Melbourne, Australia. Through Synectics, he uses an extensive network and ecosystem of advisors, subject matter experts, and investors to support companies with the funding on investment, corporate structuring, innovation, and growth. So, Chris is a seasoned professional with the 3 decades of experience in the consulting profession. So, Chris specializes in helping early-stage impact and purpose-driven companies form and scale, offering invaluable guidance on the strategies, business model formulations, investing, capital raising, and financial structuring. So today, we will be discussing the intricacies of the startup ecosystem, the role of investor and the government agencies, and the technological needs and the future requirements of these pioneering companies. So please join me in welcoming Chris Wilson to this show. Chris, thank you so much for joining this show, and thank you so much for giving your time to, these corporations more vibes of a good and taking care of something that is not just one person so, but to contributing to the society and with the startup ecosystem. That's a wonderful job that you are leading. Thank you so much, Chris, for joining this podcast and giving us your valuable time. So, Chris, can you give a brief introductions about yourself, what you are doing and how you are doing and how you are traveling so far with the, Synectics as well as your personal and professional journey? Thank you so much, kids. And now the mic is yours, so you can start, please.
Thanks, Sunal. Let me, try and explain. I've had almost 30 years now as a consultant and advisor of some way, shape or form. From the beginning up until the end of 2017, it was in more traditional large consultancies. I was a partner at Deloitte for 14 odd years, worked in strategy, technology. Back in the early days, used to build systems, cut code, build data models, all sorts of things. So I guess, I've had a really, really broad experience from a consulting and advisory perspective. I do think they say that once a consultant, always a consultant. There's just people who see things in the world and think they might be broken or know they are broken and want to try and fix them. And I guess I always had that sort of DNA in me. And then probably over the last 15 years, I started getting more engaged with startups, the startup ecosystem and venture capitalists and the investor side of things. I was just intrigued about founders and people who were willing to sort of put it all on the line to follow their passions and missions and visions and things like that. And so I started doing more work with fintechs. Banking was my primary background, but I also had a really strong connection to the environment. And so back in the early 2000s, climate change and the increase of carbon in the atmosphere was a real problem. And so I wanted to start focusing my attention on that as well. So I guess just a whole bunch of things, smashed together, to be honest. And when I left Deloitte in 2017 and was thinking about what I wanted to do next, sort of helping early stage companies, high growth companies, primarily focused around climate, the environment, biodiversity, nature repair, and things like that was a logical place for me to go. Clearly, finance and capital is a huge requirement, no matter what company you're trying to work with and what sector you're trying to influence. So my background in banking and my understanding of its, the fundamentals of how the global capital markets work was pretty important. That's really what brought me to doing what I do. I love, giving my time to talk to early stage companies for 30 minutes just to see where they're at and see if there's anything I could do to assist, all the way to the companies where I'm a lot more engaged and a lot more embedded in what they're trying to achieve, and so use my resources and my ecosystem and networks to try and bring the right skill sets to bear and help them achieve what they're trying to achieve. Because I guess from my perspective, if they are successful and they, develop a new, carbon sequestration technology or a new technology around climate adaptation or, removing microplastics from the environment, whatever it might be, whatever part my background can play to help achieve those goals, then I'm more than happy to do it.
that's a wonderful introductions you have provided, what you have traveled so far and how you have did. And especially the reason what you have is very wonderful to, give us something back to the society as well as to the environment, to the mother nature. So thank you so much, Chris, for giving this very warm as well as humble introductions in line with your purpose and vision. So today, as we are going to discuss the intricacies of the startup ecosystem, the role of investor and the government agency. So this is all about app topics that we are going to discuss in this podcast. So if you also permit me, I would like to also give a brief introductions about adfartech venture. So can I?
Of course, please.
Thank you so much. So, as I said in the beginning, also, this podcast is brought to you, all of us, by adfartech Venture. And if I say something more about the adfartech Venture, we are IT and the tech platform which we focus on IT solutions, IT resources, IT recruitments, and this kind of a tech audio podcast. And we have a vendor alliances with the 50 plus tech partners. It includes Oracle, Microsoft, Pega, OutSystems, APN, then Salesforce, Cloudera, Informatica, and many more too. And we provide almost all the types of key solutions, which includes then ERP, application development, data, then artificial intelligence, machine learning, blockchain, cloud managed services, UX UI testing, and the cyber securities too. And if I say in more details, we have resources, basis of 200 plus resources all across the skills, which we can deliver both on-site and offshore within the 24 hours. So at adfartech Venture, we just love to new different views of business tech leaders, so we can be prepared for their services, we can prepare for their solution provisions, and we can be, the great source for fellow tech innovators and other invaluable insights and trick, so we can solve them the better. So that's the main motto behind this podcast. And as today we have a very experienced guest with us, that is you. So we are very much thrilled to share from your organizations, from your views, that what is the industry's insights and experiences that you love to share with the audience. So that is all about the adfartech Venture podcast. Thank you so much for giving this opportunity to have a board with you. Thank you so much.
Absolute pleasure.
Yeah. So, Chris, if I ask you my first questions, that you have been deeply involved in supporting purpose-driven startup, right? So, what key elements do you believe are essential for promoting a better ecosystem with different such ventures, and particularly in terms of government support and investment strategies?
Well, it is an interesting question, because globally, you could argue that there are actually lots of ecosystems and lots of support for startups and for purpose-driven startups. I guess what I find, though, is taking it back to basics. No matter who I start working with, whatever startups I start talking to about whether I can help them or not, I always go through some initial work with them just to understand, are they structured correctly? Have they thought about things like tax and research and development opportunities? Have they, thought about their future shareholding structures? Have they promised people in the past percentages of their company, which we need to know about, so we can make sure that they're all structured properly into their cap table? And there's all this sort of stuff I go through again and again and again, which I sort of assume, and it's not a critique of the startups by any means, but I assume they would have got sorted already, and they haven't. And that sort of tells me that we have this ecosystem that sort of expects people to turn up ready to go. And yet a lot of these companies, when they start up, don't go through some of the basics. They don't go through some of the fundamentals they need to go through just to get themselves sorted and set up correctly, their corporate structures, their tax structures, their legal structures, all those sorts of things. And I sort of understand it, because it's a little bit of the boring stuff, right? It's not the product development, it's not the customer experience design, it's not doing the data and the AI development and the tech stack development and all that sort of stuff that, a lot of founders and startups get into. But it's actually really important, because at some stage down the track, and sometimes sooner than later, you're going to have to, deal with getting things set up properly, your legal structures. I had one company that I started working with, and I love working with them, and they're an amazing company with a huge potential, and they do a lot of R&D work. They've developed some really interesting data assets. And when we talked about R&D, I got the answer I often get, which is, I haven't really thought about that yet, not sure what I need to do. And then when I introduced them to people I work with in the R&D space, unfortunately, they had structured themselves incorrectly. They had put a certain structure in place, and they couldn't claim their research and development costs for the last 12 months. Now, if you're a startup and that R&D cost is, $40,000, then that might not be such a big deal. But if your R&D cost is $1 million, that's about $500,000 you can get back from the government in Australia. And so that was a big deal. And so it just confirms, so to answer your question, the key elements of an ecosystem needs to be from the very, very beginning all the way to the end, where companies are scaling and exiting and making, good liquidation events for their founders and for their investors. I think that's where the market seems to focus more attention. We need as much focus at the very, very early stages to make sure companies know what to do on day one, know how to get themselves set up, and then they can actually progress a lot quicker through the scaling stages and the capital raising stages that are going to come.
And thank you so much for shedding the lights on the key elements that promotes your ecosystem for a purpose-driven startup. So, as in advisors to early stage companies, may I know what are the challenges that do you observe them facing when it comes to navigating the regulatory landscapes, and how do you assist them in overcoming this?
Yeah, it's really interesting. I mean, when it comes to regulatory landscapes, I think the answer is simple. And it comes from the fact that most founders, when they set up their company, they implicitly see what's wrong or what needs to change. As I had mentioned in my introduction, my background is primarily financial services and banking. And so I've done a lot of work with fintechs over the last 10, 15 years. And what they're really good at doing is looking at a bank or looking at a flow within a financial services organization. And they're really good at saying, I can see where it's broken. I can see where there's a process problem. I can see where there's a product issue that if I could do some things with data, I can make that work quicker, et cetera, et cetera. So they can quickly identify the problem. And then what happens is they start their company, they start building some technology, and 9 times out of 10, in highly regulated industries, they then bump into regulation. They discover that actually there's a reason why you can't do what they want to do. And it's not just about product development. It's not just about technology. It's actually about policy and legislation that might mean you can't share customer data or you can't do digital identification like you want to. There's privacy concerns. There's a whole bunch of compliance issues. There's a whole bunch of fiduciary duty issues within the financial services sector. And so I spend a lot of time with early stage founders in highly regulated industries, making sure they understand that and making sure that they should come at a problem, not from the perspective of, I'm smarter than everybody else, I've seen the problem, I'm going to solve it, but actually assuming that other people also know the problems. So maybe the question you should ask is, why hasn't this problem been solved? Are there any impediments? Are there actually any impediments within the regulatory landscape that are stopping this problem from being solved? And if the answer is yes, then by all means, set up your company and go for it. But you now need to understand how to talk to policymakers. You need to understand how to talk to regulators, and you need to understand how to influence people to make the changes that you need to be made for your startup to be successful. Otherwise, you're going to bang into the same walls that people have banged into for years and years and years before you.
Correct. And that's, I think, of the wonderful approach that you are leading to, make the startup system works in a better manner. So thank you for detailing the common regulatory challenges that is faced by the startups and sharing especially strategic advice and networking collaboration that you are doing a very well way. So Chris, as I know that investment plays pivotal role in scaling startups. So how do you advise entrepreneurs on securing funding from both traditional sources as well as impact investor, while ensuring that values and mission remain intact with their own purpose?
Well, Well, it's interesting. I mean, the last part of your question, like while ensuring, I think you said values and mission remain intact. I mean, that's fundamental regardless. Anyone who I work with, as soon as I see them shifting their what I say that, their raison d'etre, their reason for being, as soon as I see them shift that just to get money in the door, then I stop them and say, okay, let's have a conversation, because it's one thing to pivot your startup. It's one thing to pivot your company. And that can be quite subtle sometimes and quite nuanced. But if you shift the focus of your company and the values and the mission that you started with purely to get money in the front door, then for me, that's a recipe for disaster. So you got to be really clear, why you're doing what you're doing, because funding's important. Of course it is. People need to pay their salaries, they need to pay their bills. But what I've learned over many, many years of working with great founders, it's their commitment to the mission and vision that gets them to the goal. Funding's important, of course it is. But if they lose sight of why they started their company, if they lose sight of what their North Star is, so to speak, and they shift that purely to get money in the door, then the risk you're taking is, on one hand, I've now got funding, but I now don't necessarily have the passion or the drive to do what I thought I wanted to do, because it's not the same company. I've changed what I wanted to do. So that's answering your part of the question around making sure your values and mission remain intact. That's the job of their advisors and their mentors and their network, to make sure they're sticking to what they started out doing. And if they're not, that they're really clear why they're not, and that the new mission is what they really want to be doing with their time. But separately than that, I spend all my time just making sure they answer a series of questions all the time. Why are you doing what you're doing? Will you be around in 10 years' time? Do you want to be around in 10 years' time? Or do you want to get a big exit before that? What are you willing to sacrifice to achieve your mission in terms of bootstrapping, not paying yourself a salary, taking a low salary? Get really clear on what funding do you need and when and for what. So having a really clear capital runway that tells you every 6 months what's it going to cost to deliver, what money do I have, what money do I need from the external markets. They need to ask themselves, do we want to give away equity? Are we happy to bring in investors who then take ownership and some ownership of the company? How much equity are they happy to give up? What does that look like over time? And then I always make sure they understand what other options are there to raise money. Are there non-dilutive government grants? Can they get research and development rebates from the government? Are there other non-dilutive debt financing options that they can look into? R&D debt. I mean, there's so many options these days, and I think founders quite rightly get confused, and there's just a lot of noise out there. And so the only way they think they can raise money is to do an equity round and give away part of their company. And then lastly, I always make sure that they start thinking through the sort of strategic advisory people that they want around them. There's a lot of people like me who have experience, have been around the space for a while, who are willing to give our time, often, freely, just to try and help people get on the right path and, get on the right rails. There's also a lot of people out there who don't have much experience and don't have much expertise. And the danger in the venture capital world, generically, I think, is it's becoming quite cool to be in VC, quite cool to tell people that I'm a venture capitalist or, I work in startups, etc. And from a founder's perspective, you're going to make sure the people you're working with actually have the skill set, actually have the expertise to help you, have the integrity to tell you what they really think and not just be nodding and saying yes all the time to you, and also have a network and an ecosystem they can bring to you. So when that advisor says, I can't help you, they can say, but I know someone who can, and they can introduce you to other people who can then come on board and help you with your strategy execution going forward. So there's a lot of stuff to get really, really clear on before you even look for money, because I can guarantee you one thing: if you're not clear on why you need money and clear on the questions I've just outlined, there are a lot of investors who will come very quickly with the cash. They'll come very quickly with terms and conditions. And before you know it, you're not necessarily as in control of your own destiny as you once were. And that's a real issue for founders if they're not thinking smartly around raising money.
That's great. Thank you so much for, giving us the comprehensive view on this, how public and private sectors can collaborate to support this venture, and particularly while I'm showing from your each and every words that, that you are not just only doing a business, but a strong mentorship network that you are also managing. That is a very insightful. Thank you so much, Chris. So, Chris, my next question goes to align with this answer only, that as an advisor or as an the best companion in the startup and government agencies in achieving the growth in sustainable and innovations, that would you like to share any specific success stories or example where this collaboration has been particularly impactful?
Look, there's a lot I'd like to think. There's some companies I'm working with at the moment. I could go through those very quickly. And there's one company called Seabin, which is what I would call a nature repair business. What Seabin does is they have built technology to filter plastics and microplastics out of the ocean, which is fascinating and amazing in its own right. But we don't pretend to tell anybody that we can get all the plastic out of the ocean. That's almost impossible. I think we're too far gone. But in getting the plastic out of the ocean, we also do a lot of science on that plastic. We look at the data around where the plastic is found, the size of the plastic, currents, temperatures, time of year, all those sorts of things. And it's that data that is then used to inform the science that we do around the microplastic removal. And then we use that to then inform, governments at the state level and the federal level in Australia. We use that data to inform them about what's going on in the oceans, where the plastic's coming from, and therefore the policies that we need to put in place to stop microplastics getting into our environment in the first place. So that's a really interesting company, but it's a challenging company from an investment perspective, because when we talk to some investors, everybody loves the company. Everybody loves the fact that we're getting microplastics out of the ocean. Everyone loves the fact that that's going to be an ongoing health concern for everybody on this planet if we don't sort it out very, very quickly. But we also live in this, I think, quite cynical world of investment these days where everyone wants to invest in software. They want to invest in, SaaS companies and companies that can scale via licensing and subscription models. And yet companies like Seabin and others actually have physical assets that we need to deploy, that we need to put in the water to actually get the plastics out, to do the science, to inform the policy that's actually going to be good for all of us. And so I think it's a classic time when, if you're an impact investor, these are the sort of companies you should be looking at. And typical VCs obviously, look for great returns and quick returns and 10 by multiples and all those sorts of stuff. That's not necessarily going to happen in the impact space. I think it happens eventually, but it just doesn't happen quickly enough. So Seabin's an amazing company. It's also a company where governments need to be more involved. If you're removing plastics out of Sydney Harbour in Australia, as an example, you're actually performing a public good. That's good for people and humans and citizens of the country. And so the governments also should be paying for that. And this is where government money and subsidies should go into supporting startups doing great work to then facilitate private sector money to come in on top and actually help them scale. So that's one company I work with. A bunch of other companies I work with, which is really interesting and might be slightly surprising, but I set up a company called Subac Australia in 2020 here in Melbourne, and all we do is work with not-for-profit startups. So when people say startups, by definition, they're always talking about for-profits, companies that are commercial, that want to get a return. And yet on this podcast already, we've talked about the need for understanding of regulatory frameworks and legislative processes and policy processes. And often for-profit startups don't worry about that. They just want to go and do what they do, but then they bump into policy issues, as I said earlier. Not-for-profits, the companies that we support through Subac Australia, they are all laser focused on policy. They want to influence government at the state level, at the local level, at the federal level, to change policies to enable different companies to come in and make huge change and huge impact on climate change, or environmental destruction, on biodiversity loss, on nature repair. But they appreciate that that can't happen unless we change our policies, unless we use data and insight to inform governments on why they can change the regulations and change the legislations to help for-profit companies come in and commercialize saving the planet. So the not-for-profit side is really, really interesting as well. And we set that up in 2020, and we've had 13 companies go through our program, and all of them have gone on to raise more money. All of them have gone on to impact on policy and make real change possible for the for-profit side of what we're talking about. So that would be the other one. I think we've seen great success. And to your question, all of those not-for-profit startups needed exactly the same help as all the for-profit startups. They're in exactly the same position.
That's a great examples that, not just only informative, but also inspiring. Thank you so much, Chris. So, Chris, how do you evaluate the potential impact of these ventures? Is there any, guide or a tool that you are using to identify what are the impacts and how they are going to, help to the nature as such? It is like that, anything?
Well, look, what I do very clearly with any of the companies, be they on the not-for-profit or the for-profit side, is clearly we need to get better measures of impact. So in the traditional venture capital world, my perspective is some of the funds in the venture capital world struggle with the impact side of investing because a few things happen with impact companies. Often the time for a good return, commercial return, is a bit longer. And so I've spoken to, a bunch of venture capital funds around impact investing, and they tell me that they're focused on impact, but they still are looking for a very fast turnaround and fast returns. That doesn't always happen when you're looking at impact, because the very nature of some of the impact work that goes on at the moment around climate, for example, takes time. If you are a regenerative agriculture company, for example, it takes time to start a project on the land. It takes years to actually do the regeneration work. It takes years to measure the delta in carbon emissions. It takes years to measure the delta in carbon abatement and what's getting sucked into the trees and into the soil. But the upside and the potential for the planet is enormous. But it's going to take 4, 5, 6, 7 years to even start getting a sign that there's going to be a good return down the track. And I find that time frame is just a little bit too long for venture capital funds, a little bit too long for the LPs of those funds who are looking to get, their money out quicker. So what I then do is say, okay, so we need to go find different types of investors. Often high net worth individuals or family offices are a good option. They also want good returns, but they are often beginning to become more aligned to longer term outcomes and longer term impact from some of these companies. And then the last thing I do with the founders themselves of impact focused companies is, try and help them understand we need to measure impact differently than just a financial impact. We need to measure, if you're a company which is taking carbon out of the atmosphere, we need to convert the carbon abatement that your company is going to be responsible for and turn that into a metric that an investor will want to report on. So in this world of ESG and corporate responsibility and all those sorts of things, companies focused on impact have a really interesting opportunity to sell that impact to the corporates, to tell them that we are going to take, 1 million tons of carbon out of the atmosphere, and that is worth something. So the company itself is worth something, but the actual thing we're doing is also worth something. And if you're an investor in that company, you should tell the world that you're putting money into a company that is going to, help us stay under 1.5 degrees Celsius. You should tell the world that you're investing in a company that's going to take microplastics out of the environment. You should tell the world that you're, investing in a company that's going to help farmers forecast terrible weather events so they can actually manage their crops and their herds of cattle better, and so they don't have any negatives onto their productivity and their production. So there's a whole bunch of things I say, let's get the return on investment. Let's understand the metrics from a financial perspective, of course. Part of that is just good commercial management of a company. But let's also get really clever with the impact management and the impact metrics that we're going to put forward for our investors and for the public to really understand what we are doing to the environment, what we're doing for nature repair, what we're doing for biodiversity destruction, above and beyond just getting a 10 by multiple on a dollar invested.
And that's wonderful and a very detailed, thoughtful approach I can see from your whole answer. Thank you so much, Chris, for this wonderful insight given by you. So, would you like to share any insights from your current clients that you are working with, any specific challenges they are facing in today's market?
To be honest, I'll probably cover that a little bit with CBIN I was talking about before, and then the clients we've got with Subac Australia on the not-for-profit side. Probably just, one other I'll mention is a company called Mistio. And Mistio's, I won't necessarily say it's a challenge. What I love about Mistio, though, is in the world of climate change, which is where they're focused, for many years now, the world is focused on two specific things. The world's focused on companies that help with the transition to non-fossil fuel energy sources. So, transition to wind farms, solar farms, wave technology, all those sorts of things. That's number one. And then the world's also focused on a bunch of companies that are looking at decarbonisation. So how do we take carbon out of the atmosphere? So companies like the one I just mentioned, a regenerative agriculture company called Regenco that I worked with in 2019, 2020, their whole reason for being is to help farmers farm in a different way to then help abate carbon into trees and soil and take that carbon out of the atmosphere. So there's a whole bunch of companies focused on decarbonisation as number two. But not many people talk about number three, this big section of or sector of companies that are really focused on climate adaptation. And all climate adaptation means is whilst we try and fix the problem of too much carbon in the atmosphere through decarbonisation and through transition to renewables, etc., we still have a problem because we already have a global temperature that's gone up, and we already begin seeing every day on the news, we're seeing storms and droughts and floods and bushfires, all those sorts of things. And so we currently have many sectors, and in Australia, the agricultural sector specifically, already being negatively impacted by the fact that we've gone too far on climate. And so climate adaptation companies, they exist to help the agricultural sector, as an example, forecast better in terms of climate events and then become more resilient about what those events might do to them. This includes working with insurance companies to come up with different insurance products to help farmers in case there's any issues with storms or floods or droughts, etc. And so Mistio is a very data-centered, AI-centered company. We work with hyper-localized and hyper-regionalized weather forecasting. We work with companies in Australia like Meat and Livestock Australia, which works with all the cattle farmers in Australia, to help them forecast negative climate events and what the impact might be on their herd. And then we work with insurers to help them get different products in place so those farmers don't lose financially from the fact that our climate already has gone too far. So that's another great company. Australia is just really waking up to those sorts of companies from an investment perspective. And so, yeah, Mistio would be another one I'd add to the two I mentioned before, which is CBIN and Subac Australia.
That's a great and very insightful and forward-thinking approach that you are leading to, identify with the specific challenges. So, Chris, in this all system, I can see that government policies and regulations are, playing the major role. So from your perspective, if anyone has given you that, opportunity, what changes or initiative would you like to see from government agencies to better support and nurture the growth of this purpose-driven businesses?
Well, government has to, and look, already does, but has to play an even bigger role. In any economy like Australia, but it's no different in every other country in the world, really. You've got your commercial side of things. So you've got your, private sector money, funds, investing, all those sorts of things happen. But the government lays the frameworks, the policy frameworks and all the regulatory frameworks for that country. And so, the government can play a real role with startups by, helping them understand better what some of those frameworks are, making it more open to challenge some of the regulatory requirements that governments have in place. So on the government side, there's the policy and legislation and regulatory frameworks that they could be a lot more transparent about and a lot more helpful to early stage founders to understand what that landscape looks like and how they need to navigate through that landscape. Clearly, governments also need to play a role with funding. In Australia at the moment, we have a real issue with follow the leaderitis, is what I call it. Everyone loves companies and they want to invest, but they're waiting for somebody else to go first. The amount of conversations I have with VCs about companies I'm working with, and it's very positive, and they'd love to jump on board, but you need to go find somebody else to go first, and it's like, really, that's not very helpful, and actually very frustrating. And it's part of the reason in this country right now where we're not getting a lot of, investment into some of the sectors that really need it, because everybody's waiting for somebody else to take the first step. So governments could be real leaders if they were to actually jump in themselves and say, well, we love this company, we love what they're trying to achieve, we want to back them. But even governments at the moment are in the same problem. I've talked to 2 government agencies in the last, say, 6 weeks, and both of them are really positive and really encouraging about the companies that we're talking to them about. But again, they will follow the private sector. So the public sector won't lead. And so you've got a stalemate. You've got these great companies doing great things. Everybody who looks at them and says they're great companies doing great things. And yet nobody wants to actually put the money in to fund them. And all that means is week in, week out, those companies are burning more money, are losing money from their cash flow, and eventually will go out of business. And that would be a travesty if those are great companies that deserve to be funded. So governments can do, 2 or 3 things. They can absolutely support the regulatory and policy environment and make sure founders understand better how to navigate. They can be more proactive in funding and putting money into private and, government and private venture funds, where there's management teams and experts who understand how to invest and how to go first and how to lead investment rounds. And then lastly, there's a whole bunch of other things, but lastly, maybe I ought to say, back to what I said about SUBAC Australia, they also need to support the not-for-profit scene and appreciate that not-for-profits in this country, especially in Australia, don't get a lot of real support. It's really hard to get money from the government. There's lots of grants, but they're all small grants. There's no follow-on funding. You'll get money for a year, but not for 2 or 3 years. So there's a whole bunch of things there that if the government was just to stop and take a breath and say, if we helped founders understand the regulatory framework better, if we actually invested more proactively in these great startups earlier, and if we supported the not-for-profit scene to really build the data and insights to push policy down the road, then I think we'd all be better off. And then hopefully the private sector would actually jump on board a lot quicker.
Really much needed, help from the governments as well as your personalized dedication shows that this is the must required for any startups to move on. So, Chris, as this is an audio podcast, that do you use any tech stack to support your clients or to address these challenges and opportunities?
Oh, look, I guess, I don't have a one-word answer or a product or anything like that. It's a real mix. Clearly, we live in a world now post-COVID where people are still working remotely. I use that as a positive that I can work with startups. I'm in Melbourne. I've got startups in Byron Bay. I've got startups in Perth. I've got startups in Sydney. So actually working remotely is really, really important for me. And I think hopefully important for my founders and startups that I work with. So I guess from a tech perspective, Gmail and the Google Cloud tools, what I use just to keep it consistent. I use Slack. Slack I use a lot. I'm looking at Notion is becoming more important as a template-driven tool. So I think Notion's really interesting. But clearly MS tools and Teams, I jump on as much as I need to with some of my clients. And then it's my ecosystem really that I think that's my technology stack. So what I mean by that is I don't know all the details about everything I talk to my startups about by any means. I've been doing advisory and consulting work for almost 30 years now. So I've got a pretty good understanding of a lot of things. I've always been interested and curious about a lot of things. So I do a lot of reading and I dig deep into a lot of topics. but I'm not a lawyer. So I've got legal people I talk to all the time. And if I need to, I will get my founders to talk to certain lawyers I work with, make sure they get their frameworks and corporate structures in place. I've got some CFOs in my world who I refer to on finance and tax matters. I've got a really great grant team who I talk to all the time about working with my clients on R&D grants and government grants. I've got venture building services I talk to, tech advisory people I talk to. So I've got a really good network stack of people that if I'm talking to a client, a customer that I want to help, and I think they need a go-to-market strategy boost, or they need to some help with hiring talent from an HR perspective, I just refer them onto people who I trust. I refer them onto people who I know understand how to work with founders and startups. And, the actual technology we use to connect people like Zoom and Calendly to do diary management. I mean, there's so many other tools out there. They're the ones I've picked. But my ecosystem really is my value and my ability to be the point contact with my founders, but then have this huge network of really experienced, really amazingly expert people in their fields. That's really where the magic happens.
It's a very wonderful and forward-thinking perspective that you are leading the way. So I cannot say that you are only an advisor or, the founder who just run the business, but you are a really very good leader also. So thank you, Krish, for explaining the way next demand of technology as well as next demand of customer, what it would be. So, Chris, I think I had covered everything. If I ask you ahead of all these questions, what could be that one advice that you would like to give to your future prospect clients or your next clients that they are going to apply for the startups? So what it would be the one advice that you would like to give to all the people, those who are seeking into this line?
So the one bit of advice I'd give to a startup founder, is that what you're asking?
Yeah.
One bit of advice. I guess I'd give them one bit of advice, but it would be double-ended in terms of get real clarity on what your North Star is. Like, why do you want to do what you want to do? And challenge yourself on that all the time. If it's just to make a lot of money, because you want to be a unicorn and you want to, be one of those startups, then start again, because that's a really hard North Star to meet. So get really clear. Why do you want to do what you want to do? Why do you want to set up a company to solve for climate change? Why do you want to be doing something in the social impact space? What is your purpose? What impact do you want to have? Get really, really clear on that. That'd be the first thing. And a lot of people I talk to are very clear on that. But you ask a few questions, and it's not hard to sometimes just bump people off that a little bit. And that's when I say, okay, get really clear. What is it? What is it you want to do, and why are you doing it? Because once you decide to do it, you need to dedicate yourself to that task, and that's a hard journey, right? It doesn't come with lots of money, doesn't come with salaries all the time. You're bumping into people who don't understand what you're trying to do. People won't get it. They won't want to fund you. You'll get knockbacks. You'll get negatives. But if you believe in what you want to do, then absolutely stick to your guns. And then the second part to your question that I'll answer would be, but then make sure you've got the support you need. Make sure you set yourself up from the beginning with the future in mind, so you don't have to go back and redo simple stuff later, because that becomes more difficult. Get the baseline in place, get your scaffolding in place, understand your North Star, be passionate about it, and then get good people around you. Get people you can trust. It's okay. Part of my job is on the actual content side, but also part of my job is, over the years, I've had startup founders just call me just to have a chat, just to get something off their mind. They're a bit stressed on a Sunday afternoon. They're a bit worried about something coming up. I love the fact that they can just call me up and have a conversation, and I'm just basically a listening soundboard for them. And then other times they'll call up and it's a very specific structured conversation. We need to talk about fundraising. We need to talk about a pitch deck. We need to talk about going to see a government minister about something. That's a really specific conversation. And then other times they also know they can call me up and they can go, hey, Chris, I'm feeling a bit stressed. I'm a bit worried about something. And then we talk it through. And that's really important for founders to have people in their team that can help them on the content, but can also just help them with the other stuff that happens every single day. Because being a startup founder is really, really tough.
That's true. That's true. And I think this is the best structured and client-focused approach that you are leading, and it's very impressive, as well as definitely going to be greatly beneficial to all the listeners, those who are listening to this podcast episode. So as we wrap up today's episode, I would like to extend my heartfelt thanks to you and for joining this podcast, as well as your wonderful insights into the startup ecosystems that definitely, be guiding impact-driven companies, very handful resource for their inspirations and to lead the global challenges to address the, impact they are creating. So thank you so much, Chris, for joining this podcast. And I really appreciate your experience and wisdoms that you have shared with us, and we really look forward to seeing the continued positive impact of your work together. So thank you once again for being such a fantastic guest on adfartech Venture podcast. And as per the host, I would like to say you are really, really, really very helpful for the people, those who really seek advice in terms of a startup ecosystem. Thank you so much, Chris, for joining this podcast.
Absolute pleasure. Thank you for having me. And for everybody out there listening, support founders and startups, because if they don't take on the challenges of the world, nobody else will. So they're a very, very important part of the ecosystem. But thanks for having me. It's been fun.
Chris, and those who are listening to this episode, if you would like to know something more about in details about what Chris Wilson is doing, just go onto his LinkedIn profile and you can find him a very informative person to share his knowledge and expertise with whatever he has. Even also you can follow him with his Synectics venture to know more about his works and the way he is building the startup ecosystem. So this is all about today's podcast, and to learn more, to share more, to discuss more, just go on to adfartech Venture podcast, and we will be there to help you for any kinds of needs in terms of technology as well as advancement of the future tech stack. So that's all about today's podcast. Thank you so much again, Chris, for joining this podcast. Thank you so much, audience, for listening this podcast and giving us such a good response in terms of curiosity as well as enthusiasm. Thank you so much.